we got Nelson, and we're going to talk in specific about what's important to you, probably one of the primary reasons that you guys came onto the island. And before we just get into the meat of things, I'll do a quick introduction. Giovanni doesn't really need an introduction. You guys know him from way back. He did the first Act 20, Act 22, 2013. It was non-crypto. He said the first crypto facilitated for Act 2022 was like 2015. Still long time ago. So he's got the just breadth of experience to know how to navigate the system, and just super happy. He's helping change a narrative, okay? Because all of us have seen a lot of maybe like neutral and negative narratives on the media, and now we see Giovanni ubiquitously on every single deal. New York Post, CNBC, all over the place, putting out positive light. The light that we experience every single day for being on here. Does that make sense? So we got to commend Giovanni for being on and doing all those interviews. They got to prep you up with makeup all the time, right? Okay. Then we also have Nelson. Okay, Nelson, following the footsteps of Giovanni, he's going to help you with the details of your taxation to stay compliant. CPA, on the board of Puerto Rico CPA, like 5 years. He's a Harvard Business School alum, so, you know, big giga brain right here. Also, advisor to the Health Secretary of Puerto Rico. Listen, he's just helping. Don't talk anything about like a vaccine passport. He's got nothing to do with that, okay? Only praise this guy because you're getting free help today. Free help today, all right? So to get started, how is your telephone, man? You're getting jammed up with everybody trying to be a client? How does this thing work right now?
It's been pretty interesting. Obviously, it's been good. It's good for business. You know, the crypto market is still up, right? Even though it's not as high as it has been. So that's when a lot of people obviously try to get smart and remember. Like, I get the interesting calls of, we spoke, 4 years ago. I should have done this back then, but I'm ready to do it this time. So those calls are always very interesting because it's people that are aware that the incentives were around and the community's around. But obviously with the bigger, stronger, better community that we have now, it's easier to jump in, to plug in, and just to help build around that community. So it's very interesting and very positive in my light.
What have you experienced so far?
Well, I've seen the growth of the community, definitely. And this year is going to be very interesting. A lot of DeFi with all the complexities. So I'm looking forward to it. We've been growing as well. We're hiring, by the way. If any of you are interested, hit me up. And yeah, look forward to this tax season and having you all be in compliance.
A client comes to you and they got what, coin trading, or they just show you the wallets. What type of things do you need right away?
So I think it's good that Nelson's here, right? Because I always explain this. There's different ways to explain this relationship, and sometimes you need, a person like myself and a person like Nelson, because we do a lot of the design work in the legal and consulting part. And although Nelson does have the preparation, like many other people that are both accountants and CPAs, you pick one, right? So Nelson does a lot of the compliance. So that would be shown there. But one thing that I always like to highlight, and I think it's very interesting, is that people do come to persons like me and to providers like me or Nelson because they really, really want to be compliant. And sometimes, that's not highlighted enough around these programs. It's like, they use words that sound like, shelters or havens, or it just sounds like people are here to hide. And I don't see that, right? There's events like this that, thanks to Pedro, have been hosted for, last 4 years, and then the community's grown to where even when Pedro's not around, because recently he's not around much. He's entertained in other stuff, but the community is so strong that we'll come to this, and it's like a packed event, right? This light can't let me see a lot of people, but I know that there's people all the way to the back of the room, and again, come to us for this compliance. So, to your question, we do a lot of the initial work. If we're issuing an opinion on positions or whatnot, we want to see what the client's holding. But there may be things that are more robust into transactional chain analysis, whatnot. And throughout the years, what I've been able to do is build a network that goes within my firm and people that are part of my firm, but also outside of my firm, other providers that I can know, like if you need chain analysis done, I know who to send you to. Or if you need specific types of compliance, I know who to send you to, and then providers like again Nelson, who's here, and it will help you with the tax prep or audit work or whatnot. That is part of the annual compliance beyond the design.
So I think this little okay, great. Pedro will be here on Thursday, so I'm sure he's going to be spearheading it on next Monday. My son saw his picture and said, "Hey, he looks like a superhero anime character." So I'm sure we're going to NFT that very, very soon. All right. But he makes a good point that everybody on the island right now, if you're brand new or you've been here for a while, we need to stay compliant. We need to stay compliant. You start with Giovanni helping you with the Act 60, and then you pass it on to Nelson to help you with the details, because to keep his job easier with all the media outlets, we got to do our job, okay? We got to do our job. And primarily, let's just, do the first Act 60, do the donations, do that, get all the paperwork and compliance, and then leave it up to him. So one of the things you talk about, a lot of people doing DeFi and things of that nature. I'm sure people here are doing like staking. A lot of us understand the capital gains. You just want to give us a real quick primer about some of the things that, we can participate on or take advantage of for both the capital gains section plus the staking and other type of earned income?
Yeah. Before I get into like the details, I want to clarify a bit on my background. There are two Nelson Traversos. One is Nelson Traverso Senior, and I'm Nelson Traverso Junior. So I don't want to get in trouble with Harvard. He's the managing partner in our firm, and he's the one that went to Harvard. I am a CPA, tax attorney. I spent 5 years in Deloitte Tax, and that was my school on everything related to Puerto Rico residents, expats, bona fide residency, Section 933. I also handled tax matter, tax affairs of multinationals, Fortune 500, doing business in Puerto Rico as branches or subsidiaries. Then, when I joined the firm, I led a group of advisors in the Puerto Rico Treasury and advised them specifically on tax evasion, fraud detection, and maximizing the use of data to be efficient and effective in their audit efforts. Then, after the hurricanes, I thought it wouldn't be relevant to our discussion, but I know a couple of you are in the energy industry. We work with the Puerto Rico Electric Power Authority in managing or assisting them in managing the disaster funds for recovery of the hurricane. After the hurricane, that coincided with the 2017-2018 crypto bull run. And that's when we got initiated, both as investors and as advisor and CPA with the crypto community moving to Puerto Rico. So I've been in crypto related matters for a few years now, and I've seen it evolved, and here we are. Talking about DeFi now. So DeFi, primer on DeFi taxes. I like to put things into simple terms. So in very, very, very simple terms, there's a lot of exceptions, but when you receive new tokens, you're staking your tokens and you're receiving new tokens, additional tokens, I'd say the most conservative approach is to treat that in a similar fashion as airdrops. And we know airdrops are taxable and are taxed by the IRS as ordinary income. When you, as part of your DeFi strategies, you are switching, exchanging one token for another, you can be wrapping ETH, wrapping BTC, you can be depositing your tokens as collateral, but receiving a token in exchange. That, a conservative approach would be to recognize that as a trade. And we know the IRS treats trade as a capital, as the sale of a capital asset. So those two rules will help you at least to classify almost every DeFi and even NFT play-to-earn transactions in either, is it ordinary income? Is it capital gain, capital loss? When do I recognize the income? Is it when I received the token, or is it when I sold, or a combination? So simple answer, new tokens, ordinary income, switching, exchanging, depositing and receiving a different token in exchange. We could say, we could treat that as a capital sale. Lots of exceptions at the end, a lot of other considerations to determine whether if that's going to be the final tax position, but you have a broad idea.
So I'm going to jump in there, and I think it's an interesting point, because a lot of times I'm talking with people, prospects or clients. They come to me and say, well, I've been lending crypto and earning interest from the crypto I'm lending. And, I hear them out, and then I start asking them questions. Well, you're lending crypto, do you have a loan agreement? Is it on recourse? Is the interest amount fixed and determined? I was like, no, well, and then the easy part is like, are you just doing it on a platform like Celsius or BlockFi? I was like, yeah, no, I'm depositing on BlockFi and Celsius. So it's an interesting thing, because these platforms, the wording they use is like rewards. They're sharing rewards, and one of the important parts for them and these platforms is they don't want recourse, right? In case something would happen, you don't have recourse like you would have in a loan scenario. So that's one of the clear indicators that we're not dealing with passive interest income that would be treated in that way. And then, if we go into the science of it, you're getting a part of fees that are used for a transaction validation or for the use and maintenance of the blockchain. So when you look at it that way, you're dealing with income that's ordinary in character. But it's one of those interesting things, because the default for many people is to just call it interest, to a point where even on the regulation side, I think that's the narrative that's got to the regulators, or to some regulators first, that's even gotten them concerned. Well, people are lending, or companies are lending, they're issuing loans. Do they need a license for this? Do they need a financial charter? And you have regulators wanting to look into this, because the way it's promoted or discussed is like if it was interest, but yeah, it's far away from that. And like you referenced, the IRS guidance issued in 2018 that treats airdrops as ordinary income. That's part of the guidance we've been issuing, and that was our opinion for years. And if somebody has like one of my older opinions, they'll find that we discussed that. So that was like one of those. It was one of those points that I had resistance on, but we did have confirmation. and which will be it's completely certain will be the same situation, or is the same situation for DeFi, just because you look at the guidance we have for computer programs, software service, etc. It falls right in line with what we have for DeFi versus it being treated like interest or ordinary.
Go ahead, I agree.
I appreciate the nuance. Okay, listen, last time you were here, we were having some bills going, or some, I'm not sure exactly what went on. And you were saying, hey, we're on the right trajectory, but we need to advance it somehow support it. Can we just digress and talk about that real quick before we turn out the Angelica for questions?
Yeah, so right now the status is that those bills haven't been voted on. There was one bill presented in the House that was repealed as soon as it was presented, pretty much. The chairman of the House pretty much said that, we needed time, that this wasn't the time to present any change. But, it's continuous threats looming. And that's why, I mentioned that time, I still mention, you can't let our guard down because it's not something that happens immediately. There are things that happen peripherally to, we have to be honest and blunt. In this case, the crypto community has come and grown in Puerto Rico because of these tax incentives originally. Now it's at the point where I see people that don't necessarily have or need the tax incentives and will still come. But, that as in the same way those things may be commingled in a positive manner, people will try to commingle that in a negative manner, especially, it's politics in the end, right? And people will push that. So that's why the change in the narrative is important. That's why pushes for legislation are important. And that's why proactive pushes for what we need, if something needs to be modified, if something needs to be corrected, are still being pushed. That's why the courses that are done, Crypto Curious in Spanish for people that are not at the level of being here yet because won't understand half of what's said here. That's why we continue to push Crypto Curious. And eventually when people graduate from that, then they can be regular members of Crypto Mondays. Hopefully, right? It helps for that integration and just to get more people on our side.
Any other ways that we can support you in your effort to, do the positive thing on the Capitol? I know one thing for sure is like if you see the CNBC article, you see the New York Post article, same thing you see for the YouTube guys. You got to do thumbs up, write down something positive, get your family to write down something positive. We got to do all we can to make sure the algorithms, when they see something positive that Giovanni's putting out, spreads.
Yeah, it's that, and then sometimes it's the simpler part, and I'm sure we do, but just keep it in mind, right? It's the that one-on-one integration, right? Whatever we can do to integrate more and more of the local community, or if you hadn't thought about it, but things like internships, training, just reach out to local students that want to absorb and want to be present and want to be like sponges. I think that you help change a lot of that, because that's a story that they'll take back to their family and to somebody I was talking to said Puerto Rico is like 2 degrees of separation, right, instead of like other places. Well, we need to do that, and that's on the one-on-one approach. So I just continue to say on that end, and then obviously there's organizations that need help and support, but I know a lot of them get it, but sometimes you just want to make sure you're giving help and support to organizations that are also vocal and willing to say where the money came from and and where the help came from, because sometimes just a nod or a thank you it's great, and I know a lot of people want to do things in anonymity, especially when you're helping. It's the best way to do it. But unfortunately, when you have detractors, you're going to need things to point to say, look, we did this, we helped it this way. It's part of the accountability.
And are those listed organization on Crypto Curious, or do you have other the sites that somebody can
look at? So Crypto Curious was started by the Puerto Rico Blockchain Trade Association. So there's definitely ways to support the Puerto Rico Blockchain Trade Association. It's an integral part of what the goal for the PRBTA is, and it's been a success so far. It was 350 students between October and November of last year, and just restarted again. Courses in Spanish and English, at this point taught by locals, right? It had a start where it was, members of this community were teaching, and I see some familiar faces, people that have been here, that were there and are now here, and I think that's what eventually will help. Somebody spends 8 weeks doing that, and then we'll fill up the room with more and more Puerto Ricans here.
Okay, another question. A couple friends will call me and just say, "Hey, I need a recommendation." The CPA or the accountant or the lawyer I talked to, they're maxed out. Are you both still open right now for clients?
For now, yes.
Okay.
We're open.
So you guys need to get in line, all right?
Yeah, we've been getting. The community has been reaching out to us, but for now, we're open.
Yeah, no, I am. We are. I'll staff up as much as I need to continue to to service. And this is a community. This is the thing I like, right? So I have clients that are not in the crypto space. I like a lot of that too, but obviously this niche. That's why I've been part of the community for so long. So I like this, and my employees, my colleagues, they like it and learn to like it too. So we continue to staff up. It's great. You're referencing these articles, and that was one of the stories I told Juan. Like, I'm the old guy in the office. I'm going to be 35 next week, and I'm the old guy in the office, and it's great. And I see a lot of people that are younger that would have left Puerto Rico, that would be doing something else, and are here. And I could say this, jokingly or not, but there was an increase in the minimum wage earlier this year. I didn't notice, that wasn't relevant. That didn't come into my numbers because everybody's well paid in my office. So, we have young people and they have the job I would have loved to have when I was starting out, right? So, and that's part of this, and that's thanks to this community. So I will continue to add people and train them, and in this as long as they want to, as needed. So we'll never cap out.
Awesome. Guys, Angelica, do you have the microphone? Angelina. So if you have a question, raise your hand for Angelina.
Hello? Okay, perfect. Let's start.
This is a general tax question. I've got a couple of businesses in mainland, and they're LLC, so I get K1s, but it's not passive income or losses. I'm an active, I think you call them trader companies. My understanding is that even though I can offset my income by K1 losses in the mainland, I can't do the same thing here. Is that correct?
So I tried to see you. I can't, but it's the light. I'll sit on the other side next time. U.S. sourced income stays in the U.S. U.S. sourced losses stay in the U.S. Same with Puerto Rico. So you can't really commingle those. And like you said, if it's ordinary income, if you see anything on line one of that K1, it's not something you can bring to Puerto Rico, whether it's revenue or a loss. So that would be correct. Although, technically those losses should be more valuable in the U.S. than what they are in Puerto Rico. Here, they're worth, they would be worth nothing if it's on the capital gains side, or would be worth 4% if it was on the business side. So you're probably better off. It could be good tax planning to, still move and sustain those losses, if you can, if they could be suspended in the future, in case, life happens, and we all know you want to come to Puerto Rico and stay here forever, but again, sometimes life happens, you need to go back, or you will have other business ventures in the U.S. And again, because U.S. sourced income stays in the U.S., you could live here, use those losses for your U.S. sourced income.
But that U.S. sourced income then is also transferable to here because Puerto Rico taxes your worldwide income, correct?
Correct. However, if it, oh, you're there.
Yeah.
If you, so you don't pay double tax. You report everything in your Puerto Rico return, but if you pay tax in the U.S., you take a foreign tax credit in Puerto Rico. So you're really, using it. You're using it there, and you're not being double taxed here.
Okay. Are you available for phone consults?
Yes, absolutely.
Perfect.
So my website's geo, which is geo.tax, and you could reach out to me. So ea@geo.tax, best way to get on my calendar. So feel free to reach out.
Thank you.
Okay, thank you both for being here. So you talk about the conservative interpretation. I really like the liberal interpretation. So my understanding was, and I talked to 2 different accountants, I got different answers. So my thought is if you have Act 60/22, and if the income is PR sourced, you don't have to worry about income. So am I reasonable assuming if I have Act 60, I have DeFi, you don't know the source of the income, I can say it's PR and I pay no taxes. Is that reasonable?
So Nelson said it was the conservative approach, and I'm sorry, Nelson, to just, when I kind of went over what Nelson was saying, I said with pretty, solid confidence that it's going to be ordinary income. It's not passive, because for something, the majority of the scenario, for you to call something interest, it needs to be interest on both sides. If the side paying you is not taking an interest expense deduction, it's not going to be interest income to you. So unless you have a particular agreement, deal, or platform which is taking, an interest expense deduction, therefore giving you a 1099 int for these interests, then you're not going to be able to label something interest. And again, that's why I mentioned the recourse part, because normally with a loan, you're able to get that, you have that recourse, and you have a legal claim on your deposits, which is not necessarily the case with DeFi.
So forgive me, help me understand, because I thought the laws were there's like the IRS does worldwide income, and then they do like PR income as 2 separate buckets. Am I correct understanding?
I think the issue here is character of the income versus sourcing in that case particularly. For it to be 0, it needs to be passive. It needs to be interest, and that's just not the case, right? Because it would need to be that, again, for both parties. If the payer is taking,
the payer is a DeFi. It's an algorithm, right? It exists in the ether, right? It's not a country. It's not a state. Where does it exist?
do you have recourse on your deposit? If it disappears, do you have a legal claim to get the principal amount of your deposit like you would have in an FDIC insured bank?
No. I'm staking my coins, or I'm putting them in a DeFi thing. I may or may not be able to get them back.
Yeah, so I mean that's going to be like your way to know. The recourse is like unless there's an exception, the recourse is going to be your way to know.
So I think what you're trying to ask is source of income. Is it Puerto Rico source income, or is it non-Puerto Rico source income, therefore taxed by the IRS?
Yes, sir. Right.
Okay.
Yeah.
So it depends, but if it depends on various factors. But for example, if you own the keys to whatever wallet you're depositing or you're being rewarded those tokens, we might be able to say with certain confidence that may be Puerto Rico source income, ordinary income, not interest income.
But the thing is, the determining factor is because it's ordinary. If your question is sourcing, is it Puerto Rico sourced? If you're operating from here, yes, it will be Puerto Rico sourced.
Okay, great. So I stake in Aave, I get or whatever platform. I own the keys. It's my money. It's in DeFi. I live in Puerto Rico. I have Act 60. I'm here 183 days. You think PR income, therefore zero IRS?
No, that's, well, zero IRS.
That's
Yeah,
not
zero IRS, zero tax overall, not necessarily,
Okay,
because you're
sure.
worldwide taxed in Puerto Rico, but it will be Puerto Rico sourced because it's ordinary. Hence, it follows where the service or the activity is being done. If the activity is being done from Puerto Rico, then yes, it's Puerto Rico sourced. Then yes, it falls under the exemption. If the activity is being done from here. Now, that doesn't automatically mean zero tax overall.
That's correct. Yeah. Let me complicate things a bit. Remember that this is all emerging law, so there's not like clear guidance on this. 2 or 3 years down the road, we might. The IRS might disagree with this. For example, is this ordinary income, why are we saying that it is Puerto Rico source income? Because you're holding the keys, but you're not actually doing the work. The work is being done by a decentralized entity in the ether. Does that entity has more nexus to other jurisdictions than Puerto Rico? Maybe, depending on which one you're looking at. May the IRS, in order to collect more tax money, decide that that's the factor that they're going to weigh to determine if this is Puerto Rico source or non-Puerto Rico source, not even U.S. source, non-Puerto Rico source. That may be the case as well. So, yeah, I just complicated things. That was my contribution.
I appreciate it. And just to follow up related to that, so what is there, I've never done this before. Is there a disadvantage to doing the liberal interpretation and then like the IRS comes at me, or is there like a grace period you think there would be? It says, well, you did this in the past, but our things, and how would that work?
Well, when I mean the conservative approach, and more especially to Act 60, Act 2022, it does not necessarily mean it is the most expensive approach in terms of taxes. Because for me, the conservative approach, both protecting you and me and myself as a professional, it would be to interpret as literal as possible the little guidance that we have. So if, for example, you're wrapping a coin and receiving another one, the conservative approach to me would be to recognize the gain on that exchange, even though for you it is not a gain or a sale. But that conservative, like legal interpretation approach would mean that it is a capital gain, and under Act 60, capital gains are tax-free. So when I mean a conservative approach, it's more on what interpretation and what tax position we're going to take based on your circumstances as a Puerto Rico resident that meets all the residency requirements and that has that you may or may not have a tax decree that makes your capital gains tax-free.
From, just in general, this is not a crypto thing, but just general, IRS tax law and procedures. There's something called statement of standards on guidance, and you have different levels that are like frivolous, non-frivolous, substantial authority, reasonable chance of success, more likely than not, shall would. Once you're at a certain level, it's below a certain level, and you're wrong, you always get a penalty. Above a certain level, and you're wrong, you may or may not get a penalty depending on the guidance you received. And then, there's a point where you should never get a penalty because it was pretty clear. So I think your question was, sort of along what risk we have. Well, depending on the guidance and the comfort that your advisor may have on giving you, certain guidance, you know where you would stand. And that's sometimes when I'm talking even with other providers, CPAs, attorneys, and they're trying to sway me on what their position may be. A question I ask is, would you be willing to give the client an opinion on this? And and I don't mean it in a bad way, but and sometimes they will. They feel comfortable enough to where they would give the client an opinion on it, and well then the client knows what my position may be and what that provider's position is, and they may take that opinion. But when you see there's things that we might not issue an opinion, or the opinion may be at this level, well then again, you as a client, right? You need to know, well, he's saying that this is what he thinks, but they're not necessarily willing to issue an opinion on that. And it's because of that. It's because of these levels we have to test ourselves upon and say, this is my comfort level in giving this advice. And normally in my case, I'll issue an opinion a level below my comfort level, right? So if I'm here, I'll
Okay,
I'll
let's
say
go
here.
to the next question. Here you go.
Hi there. So following up though on what he was talking about, I've asked quite a few people. So with DeFi sourced income or these cash flows, can I use an Act 60 export service to provide that income for R&D, employees, pay myself a salary? Can I use those cash flows?
Do you mean like the retained earnings from the DeFi activity?
The ordinary income that I'm producing in DeFi, yeah.
Can you use it in turn to?
Can I use that as a cash flow source of an Act 60 export service business and then further direct those cash flows into research and development, salaries, any other business expenses, hardware, equipment?
Who's earning the cash flows? You personally or the business?
No, I am, or the business is earning them. Can I have the business earn those cash flows?
Okay, one thing is you as the owner of a business to contribute capital to cover business expenses. Another thing would be to transfer the assets from you personally to the business so that the business is the owner of the assets and the cash flow belongs and is reported by the entity. Can you do it? Yes. I would advise you get with an attorney and draft the documents if you want to either loan your assets to the company and the company will do whatever with that, or transfer the ownership, and obviously with that it may you may have to recognize gains at the time of that transfer. So yeah, you'll need to evaluate your specific situation and what you want to do. But the answer is yes, you can do it. You're not doing anything illegal. You might just need paperwork.
I don't think that. It's just that
Okay.
obviously I'd like to contribute those cash flows to software development and obviously building up a business and then reduce my tax liability.
Well, when you're using when you're when you're paying for goods and services with crypto, that point in time and there, it qualifies as a trade. So you need to recognize the gain at that point. Pay your taxes at your individual tax rates, whichever apply. If you have Act 22, then capital gains, it's tax-free. If you held the assets, if you bought the assets or acquired after moving to Puerto Rico, and then once you made the payment to your employees or to the company, then the company, when they're paying the salary, that's another transaction that would be evaluated separately. So yeah, you might save some taxes.
Okay, we're ready for the next.
Okay, so NFTs are taxed as collectibles, right? Like stamps, like trading cards is different than normal capital gains. So does that fall under Act 60A, or and B, Do you foresee like regulations going more towards that or more towards a different kind of regulation in the future for NFTs, specifically for art?
Well, I don't think it's clear yet that NFTs are collectibles. They, based on my research for a few clients that are going to be impacted this year, I'm inclining more to that NFTs qualify as like digital assets. You need to evaluate each NFT like on a case-by-case basis, because some NFTs come with additional benefits like rights to royalties, and that would probably make them not necessarily they would fit as like like your typical collectible. Again, there's no clear guidance, but yeah.
No, I agree with that. There's no clarity. I know there's a common conception that they should be treated as collectibles, but to answer your question more specifically, we go back to when before Act 60, we had Act 22, and Act 22. We had this controversy where the Spanish version said valores, and then the English decree said investment assets. And even after there was a wave of crypto people moving to Puerto Rico, there was some mumbling from regulators that crypto may not apply because it wasn't a security. And just we went to the definition. It's like, well, investment assets. The decrees say investment assets. What are it's not restricted to publicly traded or marketable securities. So I would, even though now with Act 60 we have the integration of blockchain and crypto and other assets, a definition for other assets, I would say that NFTs should fall comfortably within that definition of other assets, investment assets, and that would most likely apply even if it's treated like a collectible. Now, the thing is going to be, well, did you hold it, for investment and speculation purposes as a collectible, or maybe if you had another reason to hold it, then maybe it could fall outside that. But that would be the same for any asset that's if you have an asset that's used in active trade or business, then it might not be a capital asset. So we look to those rules. But I think. Looking at that history, I would say that an NFT that you're holding to trade or holding to speculate, would fall under that category.
I'd say that whether you qualify an NFT as a collectible or not is going to make more of a difference in your U.S. tax return. If, for example, you have held that NFT since before moving to Puerto Rico, then you might need to take a look, more closer look at the classifications. But other than that, Act 60 says that digital assets based on blockchain technology are qualified. So the sale on those will be tax exempt.
Woo, tricky business. Okay, next question.
Hi. So I'm glad you brought up the U.S. tax return versus the Puerto Rican one, because this is about this. So let's take the extreme case. You spend 350 days a year in Puerto Rico. You have no real U.S. assets. You're entirely Puerto Rican, and you're conducting everything that you do in Puerto Rico. Aside from starting the 6-year clock, is there a reason to even file a U.S. return?
Okay. Compensation for work will always be subject to Social Security and Medicare tax. So you're going to have to at least report your self-employment and pay Social Security tax, self-employment tax on that. Whether if you don't fall within that requirement, if you don't have any U.S. source income, then filing or not U.S. tax return it's something that you need to decide. For example, you might not be required. If you're not required, you're not obligated to file a tax return. Most Puerto Ricans don't, but there are some benefits to filing a U.S. tax return, even if you're not required to do so. The statute of limitations start counting when you file. So, as Giovanni said, life happens, and you need to go back. The clock start counting, and after 4 years, you can at least have peace of mind that year is closed.
You got stimulus checks earlier, maybe too, for COVID. Yeah, but I agree that there's most Puerto Ricans, they don't have U.S. source income, they won't file. There's questions on this side as well.
Yeah.
'Cause there's
Yeah,
like a
okay,
whole.
great. I'm coming. All right. So, George, are you thinking 2 or 3 more questions? How much longer?
Yeah, we'll do a couple more because this side's like,
Okay, we left you out, guys. Okay, here you go.
Hi, thanks for presenting today. So this is a question regarding built-in gains. I think, Giovanni, you and I had discussions around bifurcating built-in gains when somebody moves to Puerto Rico with previous assets. Subsequently, you take a taxable event. And is it tied to the date you move, or is it based on holding periods? And there are these two schools of thoughts. And to this point, after many discussions, I haven't been able to get to like the truth. And how things are changing constantly. So what is for year 2021 filing for capital gains that were realized for built-in gains? What's the prevailing wisdom here?
I mean, we could have a follow-up call if you like, because that's one of those things that nothing has probably truly changed recently so far. I mean, the last guidance we have from the IRS is 2018, but it's one of those areas that continues to be great, just in part because these regulations predate crypto by so much. So yeah, we can have that follow-up.
Yeah.
So let's do a thought experiment and say that that the Beeple guy took his $68 million or whatsoever, and okay, so there's no ready market for that because any art collectible or whatever is going. So let's say he bought it sometime in 21. I don't even know. Okay, so sometime in 21 he buys it. If he lives here long enough. Okay, and sells it for much more than $68 million. That, I think, because there's no ready market, no buyer or seller, that you would do by the second method, days before, days after, what's the percentage? And there's the tricky thing would be cryptos that are thinly traded where there is no ready market. And you probably have some altcoins for which there is a vulgar name. And because they're so thinly traded, can you really go to CoinMarketCap on January 1st, 2022 and use that for your 12th? I don't know. So.
Thank you, Bill.
Okay, done. Maybe one more question. I think there is one more question.
Bill, will you write an opinion on that? I'm kidding. I was a running joke. Kidding.
I got a question. Question regards to crypto firms that have over $3 million of revenue. Probably from both of you, I'd like an opinion. how do you go about doing the financial audits? Because I think I asked you on Facebook yesterday. You mentioned you're doing some procedures for them. For the ones that choose not to, is there a reason that you can choose not to, and what do you recommend to do basically?
So very quickly, and I'll throw this one back to Nelson. So if you do have the $3 million in revenue, if you trigger that requirement, I mean that's where one starts, and then it goes to 10. You have the audit requirement. I don't see a way around that unless it could be calculated differently based on how your business is treated. So what I'm going to add is, as I was saying, within that network of people that we may, that I've built, I have or know accountants that do chain analysis, and would be helpful. Although maybe they're not in Puerto Rico, so they'll do the chain analysis, do the transactional analysis, and there would be some professional rapport between maybe them and Nelson, and then Nelson could take those transactions and do the audit and certify that audit. Because in the end, when you're doing an audit, you're pulling samples, right? So that would be, and if you need a recommendation for someone to do that chain analysis, I can give that to you. No one in Puerto Rico I know so far, so you still need to play tag team with a local CPA, right? Again, there needs to be a professional rapport there. But with that, I'll leave it to Nelson.
Okay.
No, I agree. It's teamwork. For Puerto Rico purposes, you need a Puerto Rico licensed CPA to do the audits for compliance. Right now, you'll need other professionals to engage as part of your team to pull up the data, gather everything, so that then the CPA can do the sampling required, and then issue the report with enough confidence to actually sign it to you. So yeah.
All right, George, back to you. These guys have been amazing. I'm sure you're going to be available for questions later.
Absolutely, yeah, guys.
Yeah.
Start with you, Nelson. You want to give your contact information out so people can type it in?
Yes.
If they're not able to talk to you tonight.
My name again, Nelson Traverso, CPA and attorney. And you can look us up at traverso.com and trccpa.net. It's TRC, Traverso Rodriguez and Company, CPA.net, trccpa.net.
Giovanni?
Yep, mentioned it a minute ago, but so geo.tax is my website, and to schedule a call appointment meeting, ea@geo.tax, so geo's GEO. Yep, that's it.
Hey guys, thank you so much for coming tonight.
Thank you.
We want to thank again Isaac and Pedro for being out and setting this all up. They're going to bring us more neighbors. We all need to bring more neighbors down in Puerto Rico, as long as they're good, abiding citizens. All right, plug them on to Giovanni, plug them up to Nelson, and I'm going to run, so don't run in line and run through a stampede to get questions to these two guys. But I'm sure that's coming. Thank you again, guys.